What's going on, everyone? Welcome to my, second stream this would be. So, I signed up recently for something called Fundrise, and based on a lot of different people, they wanted me to document, or the people that I've talked to, they wanted me to document some of the real estate investing that I'm getting into. And this platform is effectively a crowdfunding platform that allows you to invest a small amount up front, and you're able to get your money into different REITs, real estate investment trust, REIT, real estate investment trust. So you're able to put in, $1,000, and it goes across all of these different properties. So what I wanted to do was just a quick high level of what it looks like for me. I just started. I just put $1,000 in, and I wanted to show you guys what it looks like, what the platform with the investment plan supplemental income looks like. They have three different types. One is like retirement, one is long term, and then supplemental income is the one that I'm on now. So right when you get to your dashboard, after everything has been put into the account, after you've synced everything up, you can add funds pretty simply. Since my last login, I made 17 cents. And reinvestment is really interesting because you can effectively just reinvest the gains that you get. I do like their graphics, like their chart. So at $1,000 invested here in 2018, cumulatively, it's projecting. Looks like they have two different levels there. Blue being the kind of aggressive, all the way down to yellow being less aggressive, and it's got that hockey stick turn there, which is really pretty interesting to me. But you can go down and see the portfolio. So this is where you get the lower risk to the higher risk, kind of broken down by top down. So lower risk, it took out of the $1,000, it took and put 3.1% into the lowest risk and return, and then it put 4.2% into the higher risk and return, which if you're trying to supplement your income, that's kind of the great tactic that you can do. And overall, I just like the aspect of diversifying across a bunch of different projects. And for a low investment amount like $1,000, that is pretty incredible to be able to distribute across this many different types of investments with such a small investment of $1,000. So let's scroll through and see what the $1,000 went into. It looks like 5.4% into an Orlando, Florida apartment complex, 5.3% into Los Angeles construction, 4.6% of the portfolio went into an apartment complex in Arlington, Virginia. 4.5% went into a San Antonio apartment complex. Albuquerque, New Mexico apartment complex, 4.4%. Indian Land, South Carolina apartment complex, 4.3%. So it looks like it's around the 4% mark for each of these places. Odessa, Florida apartment complex, 4% even. Georgetown, Texas apartment complex, 3.7%. Atlanta, Georgia apartment complex, 3.5%. They all look relatively new. This one is almost a composite. Denver, Colorado apartment complex, 3.5%. Denver, Colorado, 3.2%. Another apartment complex. Los Angeles construction loan to what looks like some sort of condos in Los Angeles, 3.2%. And it's going down in order. So you can see that probably the more the risky investments were at the top with that 4%, and then it's kind of going down from what it looks like to 3.2%, and in San Marcos, Texas, and Charlotte, North Carolina, Naperville, Illinois apartment complex, 2.6%, Washington, D.C., 2.1%, Ann Arbor, 2%. Well, what is that one? That one. Pflugerville, Texas. I never heard of that. Apartment complex, 1.9%. Los Angeles, acquisition loan, meaning someone is trying to loan money to buy this condo, it looks like 1.9%. Los Angeles apartment, 1.9%. That's actually a pretty nice apartment. Tempe, Arizona, 1.6%. Ann Arbor, Michigan, 1.6% apartment complex. San Diego, California, construction loan, 1.5%. Los Angeles, acquisition loan, 1.5%. Sarasota, Florida, all right, that's beautiful. Apartment complex, looks like a composite. They're getting ready to build that. That's awesome. Springfield, Missouri, and that's apartment complex, 1.4%. Los Angeles, an acquisition loan. So some of these are actually just the composite drawings of the apartment complexes. So an acquisition loan, that's pretty cool. Los Angeles, another acquisition loan, 1.3%. Colorado Springs in Colorado, apartment complex, 1.3%. Wilmington, Delaware, 1.3%. Seattle, Washington, an acquisition loan, 1.3%. Cordova, Texas, 1.2%. Los Angeles, another acquisition loan. Long Island City, New York, 1%. Beaver Creek, Oregon, apartment complex, 1%. Atlanta, Georgia, ooh, a hotel, that's new. 1% of the portfolio. And let's see what we got. Agora Hills. So you guys get the idea here. I'm not going to go through all of these because there are tons of different projects. And this is split completely across so many different ones. And you can see the ones that I was already in that were completed. So my previously owned assets. And it goes through all of these different ones, like a Whole Foods in Chicago, Illinois, Colorado Springs apartment complex, lots of apartment complexes, and a couple different offices, which I thought was pretty cool. So it's a mix between your residential, your commercial, and also your kind of, well, commercial would be real retail, mixed use property even in Seattle, Washington. So I'm pretty pleased with the diversification of this. It's pretty impressive. And I'm going to be doing different videos on the different parts of this, the different pricing, the historical performance. I'll dive into now, but some of the different things were that I want to talk about in the future are things about different types of investment strategies that I'm doing, ones that I want to get more involved in, and just kind of things to share with you guys. So performance in the future, or previous performance, net of fees, including Rise Companies Corp, sponsored deals. So here we go. Looks like in June of 2014, 0 to $1 million, and then in June of 2017, the average annualized returns are 11.44%, which is pretty insane. Current Fundrise income versus public investments. Fundrise is 7.21% in annual dividends yield versus public REITs, which are Vanguard, basically 3.83% and 2.85%. Total real estate investment of approximately $1.4 million to date. The top metro areas, as you guys could see from the portfolio that I'm in, on only $1,000 investment. The top metropolitan areas are, looks like Los Angeles. They have 31 there. And then Washington, D.C., Jacksonville, Florida, Alexandria, Charlotte, looks like Richmond, Washington. So overall, these were the three that I was mentioning earlier: supplemental income, balanced investing, and long term. So supplemental income seems to be the one that's pulling the highest yield here. Current Fundrise income on their supplemental income plan. That's part of the reason why I went with that, was just because I was really interested in A, what supplemental income looked like through Fundrise, and B, I was very interested in a vast, diversified crowdfunding portfolio of real estate for a low investment of $1,000. It's really practically nothing when it comes to real estate. And Their lowest is $500 minimum, which is pretty impressive. 90-day satisfaction guarantee. I have a feeling that I'm going to be doing a lot more content around these guys. I want to do one on another project called Rich Uncles, and I'm going to be doing a little bit of a comparison in the future, but this was just a high level of my portfolio, showing you guys what it looks like, just being transparent with it, because I get a lot of questions about what I'm investing in, and on different channels on Instagram, a lot of people are more interested in binary trading, and they're more interested in some of these REITs, public kind of REITs. So this is just a new concept to me, and I'm really interested in it, and I want to start doing a little bit more research on it, because investing excites me, making your money work for you. So I'm going to be doing more content on that in the near future. But as of now, $1,000 invested, and I'm across maybe 20 different investments with only $1,000, and it's supplemental income. And I'm going to go over some of the benefits of the other types of investments on Fundrise in the future. So if you guys like this stream, give me a thumbs up, and also comment below if you guys are interested in real estate investing, what you guys are doing. I'm really interested in it, and I want to know what you guys are up to. But I will see you guys on the next